In this video, I'm going to be talking about what investors look for in a SaaS business. I'm Rob Walling. I'm a startup founder with multiple exits, author of 3 books on building startups, and an investor in more than 100 companies. Through my startup accelerator, Tiny Seed, I've evaluated thousands of startups. I'm going to talk about things investors look for in SaaS companies, and I'm going to break it down into 2 categories. The first are traits, and the second is progress. So traits are relatively immutable. They will not change over the course of, let's say, months. Maybe over several years they will change, but over the course of weeks or months, traits are going to stay the same. Progress changes rapidly over time, especially with founders who are executing. And it can change relatively quickly, literally 1 week or 1 month to the next. So under the umbrella of traits, we have founder traits and we have market traits. And while different investors think about these things differently, I do think in general, there's 5, maybe 6 traits that folks look for in successful founders and that you see in most successful founders. So the first one is a bias towards action. Are the founders moving quickly? Are they shipping new features? Are they shipping marketing approaches? Are they doing a lot of things and not sitting back and waiting for things to happen? Second one is, are they working on the right problems? Because if you're shipping a lot of things but nothing is working, or the things that are working are not the right problems that you should be working on, then you have a problem and you're not going to make progress. The third trait is personality. And there's not one personality that makes a great founder. I've seen ambitious founders who really want to hustle. I have seen laid back founders who just grind it out over the course of several years. Of course, intelligence plays a factor. Coachability, the ability to ask for and take advice from advisors, mentors, investors, is a big piece of it. I think coachability might be one of the best personality traits or the most important personality traits that dictate the success of founders. Number 4 is their network. Are they well connected versus not in their space and with other founders? The 5th one that I'll talk about here is chops. And I put chops in quotes. It's like tech chops. Are they a good developer? Do they know design really well? Do they know copywriting, conversion rate optimization, paid ads, or audience building? Do they have SaaS chops? They know pricing really well, sales, onboarding, activation, support, retention. Do they have hiring or management chops? They've built teams and they're really good at motivating people. So in the interest of keeping it moving, I'm going to look at 6 market traits. The first is the size of the market. And while venture capitalists often look at TAM, which is total addressable market, I like to think of TRM, total reachable market. And it's the total market that you can reach in, let's say, a cost-efficient manner. The second trait is the ability to reach those people, right? The ability to reach the reachable audience, and how much is it going to cost to reach each of them? Because if those folks are all online and they're all on the same forums and they all read the same websites, then you can buy ads, you can do cold outreach. There's things you can do to easily reach them. But if everybody's offline and it's all in-person events or visits to their office in order to sell them your product, the ability to reach them is decreased and the cost to reach them is increased. The third market trait is, does this market adopt new technology? So think about the legal or the medical space versus software developers, right? Software engineers and developers, they always want to be pushing to the bleeding edge of things. And so they adopt new tech really quickly versus a lot of industries, even finance. I mentioned legal and medical, but finance is another one that I think is more averse to technology. And so if you're building for that space, it's going to be a little more challenging to get your product into the market. The fourth market trait is the willingness or ability to pay. So think about an IT department that has a budget and they're trying to be more efficient and they're trying to be secure versus musicians, right? Or creators. Oftentimes, they aren't making as much money as someone in an IT department, and so their ability to pay is reduced. The 5th market trait is competition. How much is it? Are they big companies or are there other startups? Oftentimes, the big companies are clunky incumbents and you can use their biggest strengths against them. If there are other startups in the space, they're typically the companies that I'm more worried about. And the 6th and final market trait is market sophistication. So are you selling to consumers? Are you selling to aspiring entrepreneurs, bloggers, photographers? Are you selling B to small business, which is usually referred to as B to SMB, B to just straight B2B, which is, a regular size business? Are you selling B to E, which is enterprise, which has long sales cycles, fewer deals, larger deals? Through all these market traits, there is no ideal market. Each market is going to have its trade-offs, but if all 6 of these things are against you, if the market is small and they're hard to reach and they don't adopt new tech and their willingness to pay is low and there's a ton of competition, those are bad signs. So investors want some of these to be in your favor. They want your ability to reach them to be high, or that they adopt new technology or have big budgets, or the competition maybe hasn't been moving so quickly, and so you can easily get in. So that's how I think about market traits and how investors might be looking at yours. So I've looked at several traits. Now let's think about progress. And I've grouped progress into 3 areas. I'm guessing there are more. Imagine investors thinking about the progress of your traction, the progress of your product, and the progress of your marketing and sales. So under traction, investors are going to look at what is your monthly recurring revenue, your MRR, what is your average revenue per account, your churn, your growth, your average ACV, and your lifetime values. So that's traction in terms of like market penetration. But in terms of your product, investors will often look at the product itself and say, does it delight? Is it easy to use? Do customers enjoy it? Do they get onboarded and do they stick around? Are you shipping features? Like, are you making progress on the product front? And lastly, in terms of progress, investors think about what progress have you made on the marketing and the sales front? Has your team driven much traffic, and what results have you achieved from that traffic or that interest you've generated? What percentage of traffic or new leads convert to trial or to demos or to paid accounts? Have the founders themselves been doing sales and learning from these experiences? And frankly, all of these feed up and they drive MRR, they drive actual growth. And you can tell there's a lot of numbers and a lot of concepts to think about, but a lot of these things culminate in MRR. It's not the one number, but it definitely is an important number. And if your revenue is growing, that's the easiest way to show that you are shipping, that you're working on the right things, that the market is hungry for your product, and that you are executing well. And that's not to say if your MRR isn't skyrocketing, that you can't still have a good story to tell about the market size and about what you can do in that market and the progress you can make. But I always come back to the sentence I've said for years. It's that revenue is the best slide deck. Don't sit around and wait for permission and wait for investors to come and grant you this big check to go out and build your product. Build your product instead of your slide deck. Build your traction, because the more traction you get, the more likely investors will want to invest in you. If you like this video, there's a companion podcast called Startups for the Rest of Us, where I talk about this kind of stuff for 30 minutes every week, and I have for more than a decade. You can find Startups for the Rest of Us anywhere greater podcasts are served. If you've enjoyed this video, I hope you hit the like button below and subscribe to this channel. There's new videos coming out every week on topics like this, plus all types of things about launching and growing SaaS companies.